Death crosses, 6 of them all time. We are about to face our 7th. But there's 2 distinct things we need to talk about. And we're going to go back in time and look at each of those death crosses so you can be well prepared for what has happened in the past. So the first thing that generally happens, which really catches everybody by surprise, is this little sequence here. When we had our death cross, what happens in the past and what's really taken people by surprise is this move. We have our death cross and then prices spike up, catching everybody by surprise. Now, most people are still a little bit confused as to what is a death cross. A death cross means a long-term analysis of the market, that things are getting really bad and potentially picking up momentum, heading into more bearish territory for a long period of time. What it doesn't mean is that prices just continue to go straight down. That's never the case. There's no market in the world that just goes straight down or straight up. It doesn't happen. When you go down, usually you walk downstairs, you go a little bit up and down and a little bit up and further down and up and further down. And that's what's happened. You can see right here. We go all the way down, we go up, people get excited, but we don't go make a higher high. We continue to go down. Then we go up, people get excited, but we still didn't make a higher high. We go down, we go up, and you get the point. But usually, within a death cross, we're going to unlock this first type of move that catches everybody by surprise. Because we had a death cross here on October 26th, and then for the next couple of days, prices went up pretty astronomically and then crashed down even lower. So it gets everybody into this emotional state of mind, and the herd get destroyed. So we went up a bunch, and then we dropped down quite a bit, right? So again, death cross is moments away. So we've had 6 death crosses in history and 1 fake out. But let's get to the previous one in 2018. Previous death cross in 2018 happened like this. You can see that we were over here. We had a death cross on, wow, April Fool's Day, April 1st, right? Prices were down here at 6,005. Sound a little bit familiar? Seems to be pretty much the same price, same time of year, so be cognizant of that. We had a death cross, price rose 55%, 55% up to our 200-day moving average, and then crashed down historically all the way down to 3,002. So again, same type of scenario where this move gets everybody very excited. The herd starts yelling, we're going to the moon, but they always get slaughtered. That's why it's important to always be on the other side of the fence and just thinking logically, only looking at the facts and the charts and not everybody's emotional opinion. Now, let's go back even further and see if this has been repeating itself for some time. So this is 2014. And this is coming into 2015, right? We just looked at 2018. What did we do back here? Well, we had a death cross here. Wow. Actually on April 8th, it seems like that time of year, which we're in right now, is death cross season. We may want to rephrase the title of this video to call it death cross season. Now, we had a death cross, and look at what happened. Prices were down here at 355, and we rose almost 100% right up to around the 200-day moving average. 200-day seems to be this level that we're always getting rejected from when we enter a bear market. You may be asking, well, Steve, where's the 200-day right now? What does it mean for us? Could we potentially rally up 100%? Now look at what happened. We went into this period of this was kind of an anomaly where we had a death cross. We rallied up so high that for a moment's time, it brought us into a fictitious bull market, right? Where we entered this golden cross here, prices were above the 200-day just momentarily, but again, we did not create a higher high, right? If you look at these moves, even when we rally all the way up here, we still are creating a lower high, still stepping down the stairs. We can go back and look at the move here. Remember in 2018, also on April 1st, you can see that we've rallied all the way up 55%, but our previous high was here, 11.5K. We only rallied to 10K, stepping down the stairs further. That's the key. A lot of people get really hyped, but not you. You stay level-headed during these times, and you just look at the facts and the charts, and you say, okay, we rallied up to here. It's the 200-day, and we didn't make a higher high, right? So always stay level-headed. Same thing happened here, and we had a historic crash, 76% down to 162. Now, to the first ever death cross in the history of Bitcoin. It happened on this date, September 25th, 2011. Oddly enough, not in April. All right. So we had this death cross first in history, and the first thing we did, rally. We rallied out of it 20%. Again, getting everybody very excited, and then we continued to crash down even further, another 65%. Again, when we rallied here up 19%, we did not create a higher high. We created a lower high and continued stepping down the stairs. Now, let's take this learning and apply it to the death cross right now and see, what does it mean? If we have a normal average death cross, what does this mean? Or what's happening with this one? This is the only time in history, right here on September 13th, 2015. So we've got 2 September death crosses, and we have a whole bunch of them in April, the beginning of April. Now, what does this mean for Bitcoin? Because this is the only fake out death cross. We had a fake out golden cross here. This is the only fake out death cross. And again, we compared this move. This is a very, very similar move to the one we're in now. So let's take those learnings and go back to today. Now, not only are we moments away from having a death cross, we also just had a double top. The double top here just at about 7K. So this is really important, right? A double top. You may be asking, well, Steve, what's a double top? A double top is this. For week after week after week after week after week, we were really screaming 10.5K. We had to get above that to make a higher high and reverse the trend. We didn't. We ended up stopping right at 10.5K, not right here, but also right here. So we had a double top. A double top is a classic trend reversal, meaning prices will reverse to the downside, which is obviously what happened. And we also broke the 21-week moving average. Remember, we put that as the pivotal level. If we broke the 21-week, we were going to have a massive drop to the downside, which we had. So double tops are things to definitely pay attention to. Just like a double bottom is a trend reversal to the upside. So this is a short-term double top. It's a short-term problem. We still have this trend line in place that we've been following since March 12th. We haven't broken that, so things are okay. But what if we had a typical rally out of this death cross? Where would it put us? Where would it put us? You can see that if you just look at these rallies, you talk about a 40-something% rally. You talk about here with further rallies to the upside. These rallies coming out of bear markets, or sorry, going into a death cross, are pretty substantial. And if you average them, you're talking about a 40-45% rally being the first move from a death cross. So where would that put us? Hypothetically, let's just take a look. If we take prices right now, 6,600, if we come out of this and rally up, it's putting us right at about 10K, which would clearly be still a lower high, still continuing to walk down the stairs, because that 10.5K is the be all end all. But it would be a little bit different because this 200-day moving average is the one that's really played a significant role in the death crosses so far. Remember, we look back in history and a lot of these rallies rallied right up to the 200-day moving average, and if we did that, we're looking at a 26% rally coming out of it, which would put us at about 8.3, still stepping down the stairs. None of these scenarios would be such that we come out of it on top unless we're following the fake out. So again, if we go back in time here, this move coming out of, it was actually a double fake out, a golden cross fake out and a death cross. Remember, this was also a double top, just like we had a double top at 10.5K. So again, we're looking back at this 2015 and we're analyzing. If it's a fake out, what does that mean? We had our top one here at 318. We had a double top here, just like the 10.5 double top of present day. We crashed through the 50-day, through the 200-day, and in historic fashion, caught everybody really off guard. At this point, everybody thought we were in big trouble and going significantly lower. But we did the opposite. It's always the opposite of what the herd thinks. And we came out of this. So essentially, to make this really simple, we had our golden cross after we made our high, and we had our death cross after we made our low, which so far is exactly what we've done. So we talk about a double top, which boom, we had our double top. We talk about having the golden cross after we already made our high, and we talk about having the death cross after we already made our low. This could very well be a fake out, which we've been covering now for 1 or 2 months, getting everybody prepared for a potential fake out. But no matter how you cut the dice, no matter how you cut it, 10.5K is the level to watch, because we still have to get above here to change the trend. So we can rally all we want. We can get up into the 7,000s and the 8,000s and the 9,000s, and it means nothing in the big picture, because for 200 and almost 280 days, we've been in a downtrend, plain and simple. But it's very interesting how this April, late March, early April is death cross season, historically, right? Fake outs have been happening around September. So here we are in late March, gearing up any moment now for another death cross. But this one is quite different. You can see that we had a golden cross into a death cross, and again, it clearly resembles the structure of that fake out. So what do you think is going to happen? Do you think this is going to be a fake out? Do you think we're going to get above 10.5K? Do you think we're going to go lower? Or do you think we're going to rally out of this death cross in the first week or two, get everybody really excited, come up here somewhere around 8,300 and continue lower? I will mind you of this. I will mind you of this. If we have a classic death cross, which rallies somewhere up here, what happens next is a lower low. I just want to paint this clear picture. If it's a classic death cross, it will rally up, get everybody hyped. It will continue to fall back down and go lower than the previous low. If it's a classic, if it's a fake out, we've already made our low. So what do you think is going to happen?